Sinha joins in, Head of Institutional Research at Emkay Global Financial Services. Dhananjay, hi, good morning. How much of this rally is purely domestic in nature? Because the leader of this market has, for last 1 week or 2 weeks, have been domestic cyclicals. So how much of this rally has been domestic in nature, and do you think it's now getting a bit overbought?
Yeah, I think if you look at the components of sectors, the stocks that have actually run up over the last 1 week or so, it's largely cyclical, and mostly these are domestic stocks and sectors. So what we have seen is that people have actually trimmed down a little bit on IT, pharma, and auto ancillary and auto sector, which had been doing very well over the last 1 year or even last 3 months, and there's some pruning that has been happening, and people are actually lapping up things like capital goods, banking, construction, real estate. I think there is a significant. So effectively, what is really happening is that places where we have visibility in terms of earnings and growth, that has been pruned down a little bit, and places where we do not have visibility of growth, or so that's where people basically are lapping up. So essentially, there is a significant expectation of a growth rebound happening next year, and I think this is largely to do with the fact that there is a consensus view that there will be a pro-growth and pro-investment government after the election. So I think the rally, if you look at it in terms of composition, has really started after the election dates were announced. Earlier on, the market was still buoyant, but earlier it was supported by some of the sectors which are showing growth, and the so-called defensive names. So I think there does seem to be a shift that has happened over the last 1 week.
Okay. Dhananjay, hi. Thanks for joining in this morning. I'd just like to divert your attention towards the metal space, because today they're the top losers. We have that weak data which is coming in from China, as well as the global metal prices which are affecting the likes of Tata Steel, which is the top loser on the Nifty today. Would you take a call on a couple of these metal counters, or just steer clear because of maybe the lack of a significant growth which is coming in from the global space?
Yeah, I think it's a very tricky space, and metal, I think, has a certain mixed signal, and the prices of metal stocks have been moving up and down based on the global data releases. On the one hand, we have increasing evidence of China slowing down. So typically, people are used to looking at metal prices and metal stocks based on what happens in China. At the same time, there is a certain buoyancy that the market tends to price in based on the recovery that is happening in the European continent. So I think there are various events and data which are actually making the sector a little volatile. Personally, I would not really take a very bold call over there. We have been underweight the space. Recently, what we have seen is that there has been increase in realization. If you consider the Q3 numbers, there has been improvement in realization for steel sector, for instance, and there has been improvement over there. But I think this space can be volatile.